Dive into the intricate world of wine investment with our annual report 2023. Discover the market trends, challenges, and extraordinary opportunities that shape the year.
Welcome to a quick review of the annual report for wine investors. I'm Lars Granathsen, joined by Rune Splid. And today we unravel the annual report 2023 on wine investments, providing a unique glimpse into the world of fine wines.
In a year marked by global turmoil, the wine market proves its resilience. The aftermath of the pandemic, conflicts in the Ukraine and the Middle East, and a troubled Chinese real estate sector shifted investors' focus towards classic options like gold, which ended up the year on an all-time high.
And that's not all. Inflation, interest rate hikes, and economic uncertainties created a challenging landscape, impacting consumer spending and consequently the fine wine market.
Let's delve into the numbers. After 2 years of significant growth, 2023 witnessed price corrections. Despite a 7.33% decrease in average across position at RareWine Invest, the performance outperformed the general fine wine market, which showed a 14.1% loss according to Livex Fine Wine 100 Index.
A plausible divestment solution is a vital factor to consider when choosing a wine investment provider. RareWine Invest achieved a 46% average return for investors, selling over 1,300 positions in a challenging market, holding for an average of 2.5 years. This accomplishment underlines the strength of RareWine Group, as our investors leverage on the expertise of RareWine Trading, one of the world's premier fine wine trading companies.
As bottles gathers dust, opportunities emerge. Burgundy, despite a 6.68% dip in 2023, remains attractive, with a long-term analyzed return exceeded 10.6 for the last 20 years, according to Livex Burgundy 150. Characterized by micro-production, the supply and demand ratio will favor the investors in the long run when we're speaking of Burgundy. To put things in perspective, Burgundy was up with more than 34% in 2022, so a correction of less than 7% is tolerable.
Meanwhile, Champagne faced an 11.15% decline in 2023. Ultimately, it will generally settle a little bit lower when something goes up 50 or 60% in a short period of time, as has been the case with Champagne. Champagne has faced the worst price corrections in 2023, but consumption seems to be intact when looking at volume. The Livex Per 100 list reveals that Champagne overwhelmingly dominates the most traded wines in 2023, signaling a bright future for the category. And not to forget, the analyzed return for the category has been 9.2% since 2004, according to Livex Champagne 50, making it a stable long-term asset.
Italian wine shows resistance, boosting a 0.04% positive result in 2023. The bid-to-offer ratio remains healthy, especially for Barolos, Barbarescos, Brunellos and the Super Tuscans.
Across the world, the fine wine market experienced mixed fortunes. The rest of the world category, including Rhone, Napa Valley and others, declined by 1.64% overall. However, notable performers like Glenfarclas 50-year-old saw a 10% increase.
Bordeaux stood firm with a multiple 0.09% decrease. Despite the challenge, the elite like the 1998 Petrus delivered a 10% return.
In a market echoing historical cycles, 2023 faced liquidity challenges. Our expert opinion is clear. History shows that as liquidity returns, wine prices rise. Opportunities are expecting to persist throughout 2024.
Timing is crucial, as always. To presume significant price upswings in 2024 might be overly optimistic. A more plausible scenario is a healthy market stabilization. Our steadfast recommendation endures a minimum 5-year horizon for wine investment.
And that wraps up our special report on the annual wine investment insights for 2023. Thank you for joining us. I'm Lars Granathsen.
And I'm Rune Splid. Thank you for now.
Stay tuned for more insightful reports right here on the channel, and read the full report on RareWineInvest.com.